Breaking news, everyone. President Trump's tax bill just took a major step forward. The House Committee on Ways and Means has just released an official draft of their proposed legislation titled the One Big Beautiful Bill, which if passed would be one of the biggest tax cuts in US history. Now, this bill is proposing to reduce tax rates and increase some of your favorite deductions to minimize your taxes, like the Standard Deduction, the QBI Deduction, bonus depreciation, and many more provisions that people have been desperately hoping to see. So as a licensed CPA that has been updating you on every new progression with Trump's tax plan, I want to share some of the biggest surprises in this bill and some of the biggest tax changes you need to know in order to maximize your tax benefits if and when this passes. As we go through this, feel free to comment your thoughts below. And if you want to reference the exact draft of this bill, just check out the link in the description below that I've added for you. Now, let's go ahead and dive in. Okay, let's start with how this bill will help American families and workers from lower tax brackets to tax-free tips. And then I'll break down some of the largest provisions that investors and business owners have been waiting for. So the first major thing this bill does is that it makes the 2017 Trump tax cuts permanent, which will protect the average taxpayer from a 22% tax hike, according to the committee. Now, if you remember, a big part of the 2017 tax cuts were the reductions in tax rates. For example, those tax cuts reduced the 15% tax bracket down to 12%, the 25% tax rate down to 22%, and the maximum individual tax rate from 39.6% down to 37%. This bill seeks to make many of those same tax reductions permanent. It also seeks to extend the increased standard deduction, which would otherwise expire at the end of 2025 as well. If you recall, the 2017 tax cuts nearly doubled the standard deduction. For example, in 2017, the standard deduction was just $6,300 for single taxpayers, whereas in 2025, the standard deduction is $15,000 for single taxpayers and $30,000 for married taxpayers. This bill seeks to extend the increased deduction and potentially add additional increases to it. It will maintain the increased standard deduction plus add a temporary additional increase to it through the end of 2028, increasing the deduction by over $1,000. So this bill keeps the standard deduction high while keeping tax rates lower, which will save millions of taxpayers more money in taxes by default. But that's not it. The next big promise that this bill delivers on is no tax on tips. Individuals who receive, quote, qualified tips will be able to deduct those tips from their income on their taxes. For example, someone with $50,000 in qualified tip income would also be able to claim a $50,000 deduction against those tips, effectively reporting $0 in tip income and paying $0 federal income taxes on those tips. The bill also delivers on the promise of no tax on overtime. Individuals earning qualified overtime wages will be entitled to a tax deduction against those overtime earnings, effectively reducing the taxes on those wages as well. The bill also references several exclusions to prevent the potential abuse of these no tax provisions. Now, one promise we did not see in the bill, yet anyway, was the no tax on Social Security benefits. We'll have to wait to see if this is added, but this was a major promise that Trump campaigned on. Just listen for yourself.
We're going to have no tax on seniors' Social Security, and we're going to have no tax on tips. Very simple.
Now, the bill does provide additional tax benefits for seniors, such as an enhanced standard deduction of $4,000 for seniors through the end of 2029, which is also subject to income limitations. But there is no explicit exemption on Social Security income. Now, outside of that, the bill does deliver on the promise of making car loan interest payments tax deductible, which will be beneficial for families looking to buy and finance vehicles. Individuals will be able to write off up to $10,000 of their car loan interest incurred and paid when they file their tax returns. Now, in addition to that, there were also a few surprise tax breaks that were added for individuals in this bill, specifically related to tax advantage accounts like health savings accounts and 529 education plans. So if you don't know, an HSA is just a savings account used for future medical expenses. When you put money in it, you get a tax deduction, and when you use the account for qualified expenses, those funds come out tax-free. For example, in 2025, you can put anywhere from about $4,300 to $8,500 into an HSA and deduct that amount on your taxes. Well, this tax bill will basically double these contribution limits for HSAs for individuals with less than $150,000 in income if they're married, or $75,000 if they're single, meaning these individuals will be able to put anywhere from $8,600 to $17,000 towards their HSA in 1 year, which may represent a very big tax saving opportunity for many taxpayers, especially those who are savvy enough to deduct their incomes into these levels where they can qualify for this. We are also seeing expansions to 529 education plans in this drafted bill. These are just savings accounts used for qualified education expenses, which is usually used to fund college expenses, for example. But this bill broadens what counts as qualified expenses, potentially allowing it to include homeschool costs, K through 12 education costs, private schooling, and other types of education programs. Other notable tax benefits in this drafted bill include keeping the increased child tax credit and introducing the MAGA savings account, which grants a $1,000 one-time credit to children born after January 1st, 2025. Now, many of our viewers are also investors, business owners, independent contractors, or earn some form of 1099 income, even if it's on the side, or they may in the future. And if that's you, you may benefit from everything we just covered, but there are specific tax provisions in this bill that are specifically targeted to you. And it's absolutely critical that you are aware of these things to keep your taxes down. So let's turn our attention to those tax benefits, starting with one that many people have been hoping to see: the extension of the QBI tax deduction. In 2017, the QBI tax deduction was created and granted qualifying small business owners a 20% tax deduction against their business income. So a business owner with $100,000 in taxable income would essentially receive a $20,000 tax deduction on their tax returns. But this was only created as a temporary deduction, expiring at the end of 2025. But under this drafted bill, this deduction will extend and increase up to 23%, which the committee expects to help create over 1 million new small businesses and generate $750 billion in economic activity. So not only would we keep the QBI tax deduction here, but it would also increase, saving taxpayers more money than it did previously. Another expiring tax provision that many investors and business owners were hopeful to see was the extension of bonus depreciation, also referred to as special depreciation. This provision previously allowed taxpayers to write off up to 100% of certain business and investment property in one given year, such as vehicles, equipment, machinery, and even aircrafts. However, this rate has been phasing out each year, with the rate currently being set to 40% in 2025 and 20% in 2026, making this less and less beneficial over time here. Well, this bill would increase the bonus depreciation rate back up to 100% and extend the provision through the end of 2029. And not only that, but the current language of the bill would retroactively apply this rate to property purchases after January 19th of 2025, which means that people who have already purchased eligible property may see a nice boost in their tax deductions if this passes. For example, someone buying a $100,000 work vehicle in 2025 could qualify for a $100,000 tax deduction instead of $40,000 in 2025, literally granting them an additional $60,000 tax deduction. And just for context here, a $100,000 deduction would save someone almost $37,000 in taxes if they're in a 37% tax bracket. And that's just one example, but this provision will benefit all types of taxpayers, business owners, and investors. Real estate investors will be able to take more depreciation against their properties. Service providers will be able to deduct more of their equipment, tools, and other devices that they use to generate more income and wealth. And that's not even it. This bill is also doing more by renewing the Opportunity Zone tax credit as well, which is expected to spur over $100 billion in new investment over the next 10 years. So if you are unaware of this credit, what you need to know is that the government has designated opportunity zones in the US that they basically want people to invest in. And investors who invest through a qualified opportunity zone are provided with a number of tax benefits, such as a 10% tax credit against your initial investment and the ability to defer capital gains that you may have from other investment gains. Many people selling businesses, real estate properties, or other large investments typically use these funds to reduce their capital gains taxes from those investments. But many benefits of this credit are set to expire after 2026. However, this bill extends it through the end of 2033. Plus, the bill also renews the research and development tax credit, further incentivizing U.S. businesses to incur costs to research and develop new products and services. But one thing the bill does not address, yet anyway, to be fair, is a decrease in the corporate tax rate. Before this, there were claims of the corporate tax rate being decreased down to 20%, and even down to as low as 15% for US corporations that are producing goods in the US. But this is not referenced in the initial draft of the bill at all, which means the corporate tax rate may remain at a flat 21%. But the bill does introduce special depreciation rules for businesses investing into new or improved production facilities, which may still grant tax incentives to US corporations that are manufacturing their goods in the US. Now, remember everyone, while this bill represents a significant step, it is still just a draft as of right now. Congress will now go back and forth on many items in this bill over the next several weeks, and we may not see an official bill passed until later this summer. So make sure you subscribe to stay in the loop on potential changes that may impact you. Comment your thoughts below, and please like this video to help it reach more people just like yourself. And if you need immediate assistance with reducing your taxes, just head to mycpacoach.com to apply to work with my team today.